Welcome to Retire into the Stock Market Session 7 with Mark. Welcome, Mark. How are you?
Hey, I'm doing good.
Great. First thing I want to talk about is we touched base on portfolios, and you mentioned a 25 million number, which is a nice future portfolio, like your goal, right? So, and you mentioned 50% cover calls. Was it 30% trading?
20% trading and then 30% dividends.
Perfect. And that's a little more stable, it's a little more safe. Like, if I was gonna give you $1 million, I don't want you to be all in call options, you know what I mean?
Yeah.
I'd like to see some dividends, you know. At the larger amounts, the people don't want to make too much money. They just want to protect their money from loss. %20 trading, 30% dividends. So, like, let's do a portfolio now, the one that I'd like to see you write out. Let's do like 10. I don't want to question your 25 million. Let's do 10 million. Is that fair?
Yeah.
$10 million portfolio. And we can just write this out with me. And that's 7 zeros, 10 million. And then the dot 004 cents, right? So how I like to perform a portfolio, I always think I'm going to have 10% cash. So the first thing I'm going to do is put cash. That's going to be 10%. You put 10% behind that, in front of that 10%. And I like to have cash because when the market dips, you want to have cash to buy your next position, right? So what that means is like the system of that is you'll have a dip, you can buy the dip, let's say Apple dips or Netflix dips, something you like, something on your core 10. So you want to take advantage of that dip, right? So you want to buy lower. So the way you use your cash is you'll spend the cash to buy lower, but then you'll have to sell your weakest position of 10% and generate that cash again. So you're doing an exchange. You're taking advantage of a nice dip. You know how they say buy the dip. So are you there? So you use the cash for that, and then you sell your weakest position up to 10%, and that's going to give you your cash back. So you're always going to have the cash. Follow me?
Yep.
And that's always going to be there to buy a dip or to buy something that the next opportunity. You always have money, you know, because if you
10% in buying power.
Not really.
Or just
think of it like cash. If I talk about buying power, then I have to explain, you know, what that means. So just say 90% invested, 10% cash. That makes sense?
Yeah.
Okay, so you're always going to have the cash there for your next opportune trade. And when you do use that cash, you're going to sell your weakest position that's not working out to get that cash right back to you. Does that make sense?
Yep.
But if you're 100% maxed out or in margin 150%, the problem with that position is you can't buy anything when the next opportune trade comes along. You know what I mean?
Yeah.
You have to really like sell something, and in that way, you don't really have cash. You have to think about selling something first, you know. And we, you know, so it's a whole nother process. So that 10% cash is important. So the first thing I'm gonna do is put number 1, 10% cash. Okay, number 2, let's do a dividend stock. Let's do can we do Philip Morris? PM. Can you tell me the price, please, Philip Morris?
Yeah.
And the change today?
Yeah. Philip Morris PM. They're at $86 right now.
86.
The change on the day was they were down 12 cents.
Down 12 cents. Perfect. Now, can you tell me the yield, the yearly yield?
Yeah.
Percentage wise?
Div yield is 5.50, so 5.5%.
5.5%. Perfect.
Yeah.
Okay. Now let's skip down one, two. Let's skip down 1, 2, 3. Let's skip 2 spaces and go to number 3. And let's get a good stock. Let's say Amazon. AMZN. Why Amazon? Well, first of all, we can afford Amazon. Secondly, it's probably one of the best stocks, if not the best stock right now. So I mean long term. So let's do Amazon. Give me the price of that, please.
They're at 3,3268.95.
3268.
Yeah, 0.95. Their
95.
change on the day, they're down $8.76.
You know what? Can you raise your volume just a little bit? You seem to be lower than me. I don't want to overshadow you.
I'm on my max right now.
Okay, tell me what they're down. How much?
They're down $8.76.
That, you know what it is? It's you're not close enough to the mic.
Yeah, let me bring it closer.
876. Perfect. Great. And let's skip down 2 spaces, and I've got number 4. I would do Netflix next and FLX. And please give me that price and the change.
Yeah. 557.28. Change on the day, they're up 76 cents.
Good, great, thank you. And let's go to number 5. Let's go down 2 spaces and then put number 5. Let's do NVIDIA. NVDA. Give me a price on that.
Yep. NVIDIA is at 613.
Say it again.
613.
Okay. Plus
1476.
Plus 1476. Good. What else? You want to throw a stock in here?
Say that again.
You want to throw a stock in here for our mock portfolio?
Yeah, we could throw in. I like Churchill Capital.
For what? What, share growth, cover calls, dividends, what?
Just for mild trading and just the future, long-term holds. I kind of like the direction they're going in.
Okay, give me the symbol.
CCIV.
CCIB, and then give me the price.
They're sitting at 51.90.
51.90, and then that's a little low for me for a non-dividend stock, but we're gonna go with it. Give me the change.
Their change on the day was $12.72.
So this stock is really jumping.
Yeah, for the last month, it's been really good.
So it's like a stock in play. Can we just put in play?
Mm-hmm. The hot
in
stock.
Play hot stock.
And we can, and if you want to do a more stable one, we can do Apple.
Apple, good. We'll do Apple AAPL. And we'll give me the price on that, please, and the change.
Yeah, Apple is 133.03.
3.03.
Change minus 2.18.
So here I want to mention something like, how Apple's supposed to be a great stock. It's a big king of stocks, but it's down $2. So consider that, this is where it makes sense to do the cover call because, you get what, $5? I'm getting $5 on the cover call for Apple. How much are we getting? Don't look at it. Don't look at it. Just remember how much we're getting. $5 a month, $4, $6. How much?
About 5 premium.
So consider that, when this stock dips, those investors are going to come and buy it back up. It's going to be a trading range. And then your covered call is going to be just income,
Mm-hmm.
Okay. Let me add one more. Number 8. Well, actually it's 7. Number 8. Do you like Netflix? Do you like Nike or Starbucks better?
Starbucks.
SBUX. Starbucks is pretty good, right?
Yeah.
Give me the price and the change.
105.90.
5.90.
And change is they're up 85 cents.
85 cents. Good. So here's 7 stocks. We can do more, but 7 is a nice round number. With the cash position, it's 8. So what I'll do, I'll take the 10 million and I'll divide it by, well, I'm going to take 10% cash, so it's really 9 million. So 9 million divided by 7. Follow me? So 1.285. Let's just say 1.3. Well, it's going to be 1.285 million per position, right? So now 1.25 million. So now we're going to do Philip Morris. 1.285 divided by 86. 14,941. Let's just say 15,000 shares. Can we say that? 15,000 shares. Okay. And that's 1.285 million. Now all I'm gonna do here, I'm just gonna do the dividend. So I'm gonna do 1.285 million times 0.055. It's gonna give us 70,675 income per year. Follow me?
Say that one more time. So we have 15,000 shares.
Multiply the 1.285 million, which is the investment in Philip Morris. Multiply that times the yield, which is 5.5%, which is 0.055.
Yep.
And I get 70,675 per year. You follow me?
Yes.
I'm gonna divide that by just monthly, even though they pay quarterly. I'm just gonna, because we're gonna do a monthly income also. Divide that by 12. So that really pays 5,889. Let's say 5,900, close enough. 5,900 a month. Fair?
Yeah.
70,000 a year. So the first position, without counting share growth, and we may get share growth on Philip Morris. It's going to give us a nice little income. Not a lot, but at least, at the year we'll have 70,000. You can live off that. And that's why dividends are important, because you can take $1 million and live off a decent dividend paying stock. You might have to cut, your fancy spending, but it can work, Okay, so now what the dividend investors do, they just try to get more and more shares, try to get that juicy dividend. They don't really care so much about the share price because they know it's going to go up and down. They know the market's going to go up and down. There's going to be corrections, right? They'll probably buy more shares on the dip, and just try to collect more and more over time. And then they just get more and more income. It's like an exponential return. You follow me?
Yeah.
If you're getting, 70,000 at 15,000 shares, they can collect 16,000 shares at some point in the future, sell a house or something, or maybe they have pension money, then that 70,000 will go up, Okay. Next is Amazon, 32,658. So what I'm gonna do is 1,285,000 divided by 32,688. I'm getting 393 shares. Let's just say 400 shares. 400 shares. Just a little more, it doesn't have to be exactly 10% cash. We can be 9% cash, It's a general term. Some people do 5% cash. Some people do 20% cash, They say cash is king because when something happens, you got the cash there waiting there, sitting there, That's why they say cash is king, because you can do anything when you have the cash. You can buy any stock. You can do any investment. Okay. So can you please pull up the option change for Amazon? Let's look at March, right? That's technically 4 weeks. It's actually 1 day less than 4 weeks, but it's good enough. Are you there with me?
Yeah. Okay. We're looking at March 19th. Okay. Which calls are we?
Now, I like to have share growth on Amazon. We don't got to make that much money. We just want to, because, if the stock shoots up, we want to get that share growth. And obviously, we think it's the future. Is Amazon the future or not? You don't think it's going to go up? What do you think?
Yeah, I don't really think Amazon's going to go up too much.
Okay, fine. How about we do 3360, 100 points. Let's do that.
30.
How much is that going to pay?
3360 gives us a premium of 70.25.
70.25. I think it's going to go to 4,000. You mark my words. But hey, you could be better at picking stock at forecasting than I am. You just have to put yourself to the test. Okay, 70.25. So I do 70.25 divided by 3268. I get 2.14%, which is not bad. 2.14. It's below our 3 to 5, but it's not an aggressive portfolio. If we wrote the 3280, we get a lot more. The 3300, we get a lot more, right? But let's just say 2.14%. 2.14%, and then I multiply 1285 million times 0.0214. I'm going to get 27,500. So now we have 27,500 income on Amazon. Okay. This is like key to managing a lot of money. Is you need to make a proper portfolio. You need to explain it, why you're doing this, what you're expecting to make, forecasting. Hey, if it goes down, we're going to use this cash. This is our next stock on the list. If it's something dips, we're going to buy the stock. We're going to make this much monthly. This is the dividend income. This is the cover call income, etc. You follow me?
Yeah. Let's
do Netflix. 1285 million divided by 557, 2,307. So let's just say 2,300 shares. 2,300 shares. And CC March. We did the 3360 for Amazon. Let's do the 580. Can we do the 580?
Yeah, the 580 is 13.45.
3.45. So we're taking less premium. You can get more by doing the 570, but we're going to 13.45 divided by 557, 2.4%. This is and let me tell you why you're doing it. This is not aggressive trading. Let me tell you why you're doing it. You're getting less percentage because there's a conceived idea that for longer term investments, you don't want to cut your losses short. You don't want to cut your winners short. You want to let your winners run. So if you're just going to write the cover call at the money, you're going to get that income, which is great, but you might be giving up a lot of upside. So your investors might be mad at you if they think that you're cutting the upside. You know what I mean? Because they like to see when Amazon goes up 100 points, and it will, they want to get that share growth. That's what I did. I did 100 points. So 90, we wrote 92 points higher on Amazon. And we wrote 23 points higher on Netflix. You follow me?
Yeah.
So 2.41% on a Netflix cover call times 1285 million, $31,000. $31,000, and that's just a little bit better than the Amazon. Like for right now, what I see $31,000 on Netflix, $27,000 on Amazon. I see $5,900 on Philip Morris. You see what I'm doing? I'm getting right in a monthly income. So let's do the video.
How do you do that math for Netflix? What did you just do?
So CC is March 580, and we get 1345, right?
Yeah.
So we divide 1345 by the share price of 557, and we get 2.41%, right?
Yeah.
So we're getting 2.41% from our investment. So you do 1,285,000, 1.285 million, 1,285,000, 1, 285,000 times 2.41%, which is times 0.0241. And you get 31,000 and 31,029. I rounded down to 29, under promise, over deliver. I just put 31,000 income for the month, and that's what it is. You can check my figures.
Yeah.
Now in the video, now here's the big one. The video, we're gonna get a lot of money. I'm gonna tell you that right now. It's amazing I didn't do Tesla, but that's a little risky, but let's do the video. It's not as risky as Tesla, but it's a damn good stock. So please pull up the video March, and we're gonna do probably 630. Let me see, 17 points.
Yeah. Let me pull it up.
While you do that, I'm gonna find out the number of shares. 1,285 million divided by 613 share price for NVIDIA, 2,096, 2,100 shares. 2,100 shares. And let's give me a choice between the 630 and the 640. Just tell me the premiums on both.
Okay, so the 630 strike has a premium of 28.23.
Oh, that's so nice. How much is the 640?
And then the 640 strike, 24.80.
Wow, 10 points higher and 4 points more premium. Or 4 points less premium, right? Well, because the video is moving, we're gonna have to go with the 640. So we're gonna write 640 CC March. 24 what? 24.80. What a great return. This is gonna be the star of the portfolio, at least for this month anyways. Then it'll go down next month, then we'll be complaining. 640, I'm sorry, because of that. 24.80 divided by 640. We're at 3.875% return. 875. I want to go all the way to 75.875. 3.875. Don't round it down, that's money right there.
I got 4%. You got 3.8?
So you have to adjust your calculator, my friend.
No, 613. We're doing 24.80 divided by 613.
You have to adjust your calculator, my friend, to get more zeros. Look what I have. Here, I'm gonna do it for you. Look. What do we do? 24.80 divided by 613. 24.80 divided by 613. Oh wait, you're right. But I got more than 4%. I made a mistake, but I got more than 4%.
4.0456.
Yeah. Let me show it. You get a star because you caught me, so you get a star. But I'm gonna show you what I have, so I don't want you to lose any money. Okay. 24.80 divided by 613. Look what I got. This is how many zeros I want you to have. Can you see it? 4.04567. I'm gonna use every number on there because I'm not losing any pennies. Okay. Let me fix it. How many decimals did you go out to?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Mine went up to 15.
Okay, we don't have to go that far. But the point is it's not 4%. No way, no how, bro. If you just that's what I think somebody does in the higher up office. They take that 0.4 and they put it in their own account. give the 4% to the shareholders. You know what I mean? Okay, 4.0456. We'll just do that. Okay.
52K.
Times 1,285. 51,986. Is that what you get?
Yeah.
Awesome, bro. Now here's the star. 51,986. Thank you for catching me. I would have had less money. See, that's why you have accountants to check you. Hey, where's this extra money going? 51,986. So that's a great income. Now, NVIDIA is the riskiest position on this portfolio. So you have to consider that, you just can't put everything in NVIDIA because, it is going to go down 100 points and then we're going to have a share growth loss. So I just want you to, you're handling that like it's a hot potato, you can't do that for all your positions. You have to have the Philip there to balance out the portfolio. You have to have the cash there to balance out the portfolio. So what do you want to do with your CCIB stock? You want to trade it? When you're talking about trading, I'd like to see a channel where you're going to buy and sell. So what I do, let's say we just do one trade a month, just one trade a month, How many points can we get? Are you there?
Yeah.
Look at the channel. Look at how much it moves up and down. When it moves, count the points.
Yeah, so I'm looking at NVIDIA in their last month.
No, don't look at NVIDIA. We're looking at CCIB.
Oh.
This is your stock.
Yeah.
The video we're doing the cover call is done with. We're looking at CCIB. Oh. You said you want to trade it?
Yeah, I like mild trading with this one.
So let's do, how much does it move when it moves up and down? How many points does it move, like on average?
In their last week, I mean, they really boomed this week, but it's 1 or 2 points per day, and then in the
no, don't do that. Don't do that. You look at the monthly chart. We're going to do a monthly chart on it.
So in the last month, they were up $33.84.
Right. But okay, I want you to look at the monthly chart. I want you to tell me how many points it swings up and down when it swings. You follow me?
Yeah, I follow. Okay, so it swings about
average.
Yeah, this one was 7.
In a month, on a monthly basis. You'll see a couple dips.
Yeah,
couple
I
upswings.
would say about 10. Put it about 10 points.
Okay, look, we talked about Mr. Morgan's going to come watch you trade. Listen, you're going to do one trade a month. Okay, you said there's 10 points. Can we get 5?
Yeah, we can get 5 on this.
If we don't get 5 points, you might be fired. So you got to be sure. Should we say 4? Should we say 4 points?
Well,
Easier?
I mean, I'd rather just go with a more reliable stock if I'm about to get fired.
Here's where you put your money to the test. No, you already picked. We're going to do CCIB. And I want you to...
I'm loving CCIB, though.
I'll tell you what, though. I'm going to give you a challenge. Between the next, I don't know, a few sessions, I want you to trade CCIB. Just trade one share if you want to. And see if you can sell it and buy it. And see if you can get 5 points or 4 points. Or what do you want to just tell me? 3 points? It needs to work, bro. You can't mess this up.
I mean,
that's why I give you a whole month. That's why I give you a whole month because, you can time it, you can plan it. Oh, it dipped, we're going to buy. You know what I mean?
Yeah.
Tell me how many points you want to get for one trade. Accurate. You cannot miss.
I would say 3 points, 4 points. For one trade.
Let's do 3 points. Oh, you know what? Let's do 3.5 points right in between.
Okay.
3.5 point trade. Now look at this. Let's see how many shares we can get. 1.285 million divided by 51.90. So we're going to buy it today when it's up 12. We have to. I get 24,795 shares. Let's just say 24,800 shares. 24,800 shares. Mm-hmm. Watch this. You're gonna get 3.5 points out of this baby. Mm-hmm. 24,800 shares times 3.5 points. You're gonna hit the roof right now. 86,685 income, my friend. Bro. Mr. Morgan's gonna come. He's gonna put you on the top row. Hey, look at this trader. This is my top trader. He's gonna take 24,000 shares to get 3.5 points. We're gonna make 86,000. He's putting you on the spot, bro. 86,657. Which, if you do that, outperforms all the cover calls. Outperforms the dividends. And everyone in the whole company is watching you trade, bro. They're gonna be following you. Oh, let's get CCIB. We're all gonna get it. You're gonna get 3.5 points. $86,000. And he goes, this guy's gonna hit this trade. And I'm not gonna say, or you can get fired. I'll just, because you don't want to say that. But at the end of the month, okay. So now here's what you can do with mild trading. You can get 85,000. Let's look at the percent on this. 3.5 divided by 5190. Do you follow me? 6.7% return. 6.74% return for the month for one trade. You understand how important this trade is. Now let's do Apple when you're ready.
Yep.
Are you ready?
Yep.
Apple, if it came down, obviously, I would say let's do the 130. Tell me the 135 and tell me what other options there for March.
Yeah, let me get it up right now. March call 135.
Yeah.
Premium of 383.
Okay, March 135 CC 383.
Yeah, 3.83.
Okay, so 3.83 divided by 133.03. I get 2.87%, which is just shy of 3, but hey, I won't get mad at you. It's not bad. 2.879%. If you multiply that times 1.285 million is 36,995. 36,995. So we're not allowing a lot of share growth on that. Maybe we should allow more share growth. But what the hell? I'm gonna get income, right? So we'll just leave it like that. It probably go. Here's the thing. It's probably gonna go to 135, 140, and you're probably gonna sell the shares, and you're gonna be out $1 million to Apple shares. The next month you're gonna have to do it again, and you're gonna think, what a headache. Maybe I should just trade about the 140. You see what I'm saying?
Yeah.
But for this month, we're going to do it just because we're going to get the income. Okay. So I get 36,995 income per month. Yes?
Yes.
Okay, Starbucks. I don't really like to do the cover call on Starbucks because it doesn't pay enough.
They don't.
I like to get the share growth.
Very low.
So I'm gonna give it to you. We're either gonna just leave it and get and just gonna put it share growth, or we're gonna do a cover call, but we're gonna do it, like the 115, like way out,
Mm-hmm.
So what do you want to do? You're the manager.
The 115 cover call, it only pays a premium of 0.61, so I don't really like that. So I'm not even. It's not a dividend stock, and it's not even a good cover call stock, and I don't even like Starbucks for mild trading. So, in this scenario,
but you picked it from Starbucks or Nike. You want to switch it?
Yeah, for sure. Let's switch that to Nike.
And then what are you gonna do with Nike?
Let's see Nike. Let me see.
Same thing. Nike doesn't pay enough either for cover calls, but we can do a farther out cover call, like, and listen, we're gonna get the shit here. We'll do Nike. Change it to Nike. Give me the price for Nike.
Nike's is much better. Nike right now is at 141.71.
Nike 141.71. 141.71.
And they're down 41 cents on the day.
Down 41 cents.
So
okay, now go ahead.
Their 155 call, which gives us 5 extra points of share growth.
No, it doesn't. No, it doesn't. Say it again. Say it again. It's 141 is the stock price.
I know. I'm saying compared to Starbucks, if we went out, so basically the 155 call on Nike pays a premium of 0.83, and on Starbucks, the 115 call pays a premium of 0.6. So with Starbucks, there's 10 points of potential upside, and with Nike, there's 15 points of potential upside, and Nike also pays a better premium.
You want to get the 10 points of the fit? You want to do the 155 or the 150 for Nike? You choose.
Let's go 155.
Okay, so March 155 CC. How much we get? 83.
Yeah, 0.83.
Now it's not a lot of income, but hey, we can get 14 points, 13.29 points of share growth, which is great, right?
Mm-hmm.
Okay, so now I'm going to do 0.83 divided by 141.71. That gives us 0.5%, 0.0058, 0.005857 times 1.285 million. Oh, crap. Times 0.005857 times $1,285,000. $7,526. A little more than the Philip Morris dividend, right? That's how you get a dividend.
Mm-hmm.
7,526.2. I'm rounding up to 25. Okay. So when I said you didn't give me a portfolio, this is a portfolio. Okay, so now I'm going to do something really easy. Just do it with me. We're going to add up the monthly income.
Mm-hmm.
Monthly income. 5,900 for the Philip Morris dividend. 27,500 for the Amazon cover call. 31,000 for the Netflix cover call. 51,986 for the NVIDIA cover call, which is awesome. Now you're on the spot for this $86,000. 86,657. The whole company's looking at you. Okay. 36,995 for the Apple cover call, which is high, but it's okay. And then 7,526 with the Nike, and with plenty of share growth. Your choice, great choice. I get 200. Can you check my figures? 247,564.
You got
That was of income.
Write that down. I'm gonna do the math quick also now. So minus 5,900 plus what was it on Amazon? 27.
27.5 on Amazon.
Yeah, and then I'm doing.
I got 31 on Netflix.
And then Apple, I got 36. And then CCIV 86. And then what else? Nike is 7. NVIDIA 52. I feel like I'm missing something.
Apple 36,995.
Yeah, I got them all in.
NVIDIA 51,986. Netflix 31,000.
I believe you numbers. I have all the numbers on my phone, but I just messed up in adding them, and I'm not going to go through that hassle. What you said it was 247?
Yeah, I got 247,564. I
Yeah.
do want you to check me in between next week.
I will.
Okay, now what have we done? We've taken 10 million. We built a proper portfolio. Our income is 247,000. And what I'm going to do is I'm going to say times 10, because we're going to give ourselves 2 months of breathing room. Okay, and it's going to be times 10 is going to be 2,475,640 income for the year. Okay, I'm making a forecast. Now, if we have $10 million and we're getting 2,475,640, what percent return is that?
So
Can you tell me?
Yeah, 2,475,640 divided by 10.
You don't have to do that. Look, 2475, 640, and the investment's 10 million. Just take
It's 2.4%.
what?
It's 2.4%. 2.475.
It's not. It's not. This is for the year. For the year. Yeah, it's 2.4 for the month. And we're gonna multiply that times 10. Even though we can do it 12 times, I'm gonna under promise and over deliver. We're gonna do it 10 times, and for the year, it's how much percent? Add a zero.
24%.
Okay, so 24.75% return for the year. Forecast. 247,564 monthly income. I'm gonna sign the bottom. Initial. This is what I got.
Mm-hmm. I see it.
Okay, so if you want to manage money, you need to know how to build a proper portfolio. You know how much you're going to make a month. You know, you're going to do a trade. You know, you're doing it. You have dividends. You have cash. So, like, it's kind of safe. And this is like a high risk portfolio in most people's minds. But look, we've done our homework. We got our core 10. We're comfortable with our stocks. We know they're going to. We know that our stocks are good. We know what we're doing. We've been doing this every month for how long? We have all this kind of income. You know, the market dips, whatever. We're going to lose share growth, but we're going to get all this income times 10. We're bringing in 2.475 million a year income. So, you know, we can do better. You know, we can get more share growth because, you know, we wrote the cover call above the strike price, right?
Mm-hmm.
If you're a real trader, you might do this trade twice in a month, securing your job. I mean, I said once in a month, you know, you do it twice in a month. But if you miss, then hey, you know, you can do this trade 3 times in a month. You know, I know that CCIB is going to move more than 3 points. You just have to be on the right side of the trade.
Exactly.
Okay, so this is like worth the whole session just right here. Just let it marinate. You know, you said 25. Say what I want you to do. I want you to do a 25-minute portfolio. Probably throw in a couple more stocks and write it out just like this. And tell me how much money you're going to get income. And don't think that your investors are going to want to make that much money. They want to protect their money. So don't write the cover call too close. They want to get that share growth. You might want to increase the dividends, you know. And that's not like a homework, but I want you to do that before session 12. So on session 12, you're going to do a Harvard presentation to the whole board of directors, to the whole company on a Zoom meeting. You're gonna show us your portfolio and how much you're gonna make for the company with 25 million. And maybe that could be like, you know, ideally that's your own family money, personal money. But we gotta be legit, we gotta be transparent. So you have to present it. Can you present that on session 12, your 25 million portfolio? Okay, good.
25 million.
Now, I don't want to do too much. What else do you want to talk about before we wrap up?
I don't really have anything in mind.
This is like, if you can get this is a win because now you can manage money and you can work out the numbers. You know the math. You know what you're going to make probably, give or take. You can do better. You can do worse.
Mm-hmm.
So let's just end here. 10,000. I'm gonna mark this $10,000 portfolio, monthly income. Mm-hmm. Sound good?
Yep.
Thank you, Mark. Send me your questions. I'll see you next week.
You got it.